Hi everyone, welcome to Ask a Property Manager episode number 59. Today is February 17th, 2021. We're coming to you from Studio 2.0 here at Own Buffalo Inc. I'm Andrew Schultz, principal broker of Own Buffalo, and on today's show, we're going to be talking about President Biden's federal foreclosure protection. We're also going to be talking about Estoppel certificates, weather-related power outages, and we're going to be answering some questions from housing providers around the country. We'll get to all that right after we jump into our social media. New episodes of Ask a Property Manager drop every Wednesday at 10 a.m. Eastern. You can find those on our Facebook page, live on Facebook at facebook.com/Buffalo Foreclosed Homes. We also upload the replay to Facebook as well as to our YouTube page every single time we do one of these episodes. You'll be able to find that replay on YouTube the same day. And last but not least, don't forget about our Instagram. We do post content there that we don't typically post in other places, so that's something worth taking a look at. Let's see. Don't miss the current episode of the Rent Prep for Landlords podcast. We are talking about California's new bill to pay landlords 80% of their back rent, but at what cost? We're also taking a look at HOAs and how to break up with bad tenants, so don't miss out on that. New episodes of the Rent Prep for Landlords podcast drop every other week, so we'll have a new episode for you next Thursday on that. All right, let's go ahead and jump into our news of the day here. This article comes to us via CNBC. Homeowners can now defer mortgage payments for an additional 6 months. Here's how to tell if you are covered. And again, this is published via CNBC. This came out yesterday. President Joe Biden has directed fair housing regulators to extend mortgage forbearance programs for an additional 6 months and prolong foreclosure relief programs on Tuesday in a move that will cover an estimated 70% of mortgages for single-family homes in the United States. As the latest COVID-19 relief packages continue to make their way through the congressional legislative process, Biden ordered the Department of Housing and Urban Development, the Department of Veterans Affairs, and the Department of Agriculture to extend their foreclosure moratoriums and forbearance programs. Specifically, the regulators are set to extend the ban on foreclosures through June 2021, allow homeowners to enroll in mortgage payment forbearance programs through that same time period, and extend forbearance programs for an additional 6 months for those who already entered a payment program before June 30th, 2020. Homeowners will need to request the extension every 3 months. As President Biden has made clear, it is urgent that we help homeowners throughout the nation who are struggling financially from this unprecedented national emergency, Matthew Ammon, acting HUD secretary, said in a statement. The steps we're taking today will provide both immediate relief to those in desperate need of assistance and help more homeowners keep their homes and resume payments when the pandemic subsides. In addition to the directives Biden issued on Tuesday, Fannie Mae and Freddie Mac made the move last week to extend their forbearance and foreclosure programs as well. The new halt on single-family foreclosures and REO evictions extends to March. Those with Fannie Mae and Freddie Mac mortgages who are enrolled in a COVID-19 forbearance program as of February will also get an additional 3 months of mortgage payment deferral, according to the Federal Housing Finance Agency. This means that those with federally backed mortgages can now defer their payments for up to 15 months. For federal mortgages, loans made by the following agencies are eligible for relief: the FHA, HUD, Department of Agriculture, the VA, Freddie Mac, and Fannie Mae. If you're unsure who owns your loan, Fannie Mae and Freddie Mac offer loan lookup tools that can help you quickly determine if either of these major lenders owns your loan. You can also always ask your servicer or look at your loan documents. Additionally, the Consumer Financial Protection Bureau offers a Find Your Counselor tool, which provides a list of counseling agencies that can help advise on loan terms, credit issues, and foreclosure. Initially, the CARES Act provided for about a year of mortgage payment deferral for homeowners with federally backed loans. While that seemed sufficient at the time, the pandemic and its economic fallout is dragging on far longer than had been expected, Bankrate's chief financial analyst Greg McBride says. Extending the forbearance available on federally backed mortgages is a critically important move to preserve home ownership for millions of households that have seen income disruption or outright job loss due to the pandemic, he said in a statement on Tuesday. Mortgages owned by private lenders, such as banks, are not included in this relief. Biden's proposed relief package would also create a $10 billion homeowner assistance fund that would allow states to help all homeowners with mortgage payments and utility costs. About 2.7 million homeowners are currently in some type of forbearance plan, according to the latest estimate from the Mortgage Bankers Association. Of those, a majority are mortgages held by private lending services as opposed to federal loans. So a couple of key things to pull out of here. Obviously, if you are in a situation where you're struggling, trying to make mortgage payments, trying to keep caught up, things of that nature. You may have some protections here through this new federal extension of the eviction moratorium, the foreclosure moratorium through June 2021. You can take a look at, let me see here. These are the agencies that are covered. I don't know why that didn't highlight. Yeah, see, sometimes the highlighter doesn't want to do what I want it to do. So those are the agencies that are basically offering or covered under this federal extension. If you have a private mortgage, a hard money loan, something like that, that's not going to be covered under this. If you have a portfolio loan or a commercial loan, chances are that's not going to be covered under this because it's not a residential mortgage. So that's something to keep in mind. If you are having a situation and you're in one of those, situations where you have a commercial or a portfolio loan, talk to your lender. A lot of times they're able to work with you. They don't want you to default any more than you want to default because they don't want to wind up owning the asset. So it's definitely worth talking to your mortgage holder if you're in a situation where you're not sure what's going on or if you have this eligibility. The one thing I will mention is the lookup tools are not necessarily the greatest. We have seen instances where the lookup tools have been just outright wrong. So I would recommend, rather than using one of those lookup tools, go directly to your lender and ask them the question, hey, what sort of protection am I eligible for? What sort of deferment programs do you have in place? Things of that nature. That's how I would handle a situation like that. So hopefully that is enough to get us back out the other side of this. I think we're all looking forward to a day when we don't need these deferrals and moratoriums and things of that nature. The one thing I will mention is that this only covered mortgages and foreclosures. This has nothing to do with evictions. So any eviction moratorium is completely separate from this at this point. These are not interlinked pieces of legislation. We're going to jump to our next article, this one from the World Property Journal. This one is in regards to U.S. remodeling. The U.S. remodeling industry fully recovered from the COVID-19 outbreak. Kind of expected this one. I didn't think that we were going to I didn't think that that was going to be something that needed to be said necessarily, but let's jump into this one. This was published a couple of days ago as well on February 15th. According to experts speaking at an online press conference hosted by the National Association of Home Builders and Remodelers during the 2021 International Builders Show, spending on residential improvements will continue to grow at a healthy pace over the next 2 years. Professional remodelers from around the country agreed with the forecast, citing increased demand during the COVID-19 and consumer confidence. The remodeling market declined significantly at the onset of COVID-19 in March and April 2020, but has since more than fully recovered. NAHB predicts that remodeling spending for owner-occupied single-family homes will increase 4% in 2021 and 2% in 2022. After the dip at the beginning of the pandemic, remodeler confidence bounced back, and it continues to remain at a high level as remodeling spending is expected to reach $285 billion in 2021, said Vince Putler, a remodeler from Clifton, Virginia. There is a steady consumer demand, and Americans are at home much more during the pandemic. This gives homeowners more time and desire to invest in their homes. We're seeing more requests for proposals because of the pandemic. Tim Lansford, another remodeler from Arlington, Texas, says, because people are using their time at home now to remodel, the demand and backlog for remodeling remains high. NAHB estimates that the real spending on home improvements will continue to increase in 2021 and 2022 throughout the COVID-19 pandemic, said Paul Emrath, NAHB's assistant vice president for surveys and housing policy research. The biggest factors prohibiting stronger growth are mainly the volatile material prices and labor shortages. I mean, this article basically hit on every point that I would hit on after the fact. It's a very well-written article. When the pandemic first hit in March and April of last year, a lot of remodeling work was temporarily shut down. And as that remodeling work started to come back online, we started to figure out how to operate in this new environment. Obviously, the number of people staying home and thinking about home offices or, remodeling a little bit so that the kids have a place to take their online classes or whatever the case may be, even just being home more and not being out in restaurants and things like that have caused a lot of people to think it's time for a new kitchen, or it's time to upgrade the backyard, time for a patio or something like that. So we have seen tremendous demand in residential remodeling and residential rehab work since the pandemic began, essentially, especially here in the Western New York market, which has led, of course, to labor shortages and material price increases. We've talked about both of those in the past on this episode, on this show and on the Rent Prep podcast. The labor, labor is more expensive now than it's ever been, and the cost of building materials is more expensive now than we've ever seen it. We're not necessarily facing quite so many of the supply chain shortages that we were at the onset of the pandemic. I know, obviously, for a while there, things like appliances were very difficult to get a hold of, especially things coming out of China, like refrigerators and stoves and things like that. Obviously, China was shut down for a while as well. Then once they came back online, they weren't at full capacity. And then you obviously have to put that stuff on a ship and get it over to the United States. So that all takes time. So there were, obviously some supply chain interruptions. I think a lot of that has kind of sorted itself out at this point, which is good news for everybody involved, really. It's nice to be able to go back to Home Depot and find plywood and things of that nature. So not saying that all of the supply chains are back to where they were, but we definitely have improved from where we were at even just a few short months ago. So there you have it. Residential remodeling continues to be strong. We have some new protections or extension of protections for federal-backed mortgages for foreclosure. Some good news in the market today. Let's jump over to this post on our Facebook page. This is actually a new residential listing that we just brought on earlier this week. This is a rehab-ready listing up in Lockport, New York. It's a single-family, 4-bed, 1-bath. This home needs a little THC to make it shine again, TLC to make it shine again, but most of the hard work is already complete. Vaulted ceiling with skylight in living room, additional family room at the rear of the home, first floor laundry. List of upgrades in 2017 include heating, central air, electric service, main roof, and bathroom. The hot water tank and some PEX plumbing. Could add a half or full bath on the second floor with some work. Lots of potential waiting to be unlocked. Potential for private financing available. Offers due this Friday, February 19th by 5 p.m. We're just going to flip through these pictures here real quick so that you can take a look. This property, it's going to be a lot of cosmetic type stuff, I think, in the long run. Obviously, there will be, it's basically whatever you want to do with it. There's quite a bit of opportunity in this home to kind of make it your own and style it the way that you see fit. If you want to see more photos of this, you can head on over to our Facebook page, facebook.com/Buffalo Foreclosed Homes. And you can take a look at the photos there. And also you can get a hold of us via our Facebook page if you want to set up a private showing or whatever the case may be. And I think that's pretty much, there's the electric, the hot water tank, furnace, and there we go. So that's our newest listing. It's a rehab ready listing over in Lockport, New York. Nice little market, good cash flows in that market if you can get in and get out of that property at the right price. So that's definitely something that is worth considering. Let's go ahead and jump over to our humor for the week. Buyer, I'm thinking about buying a house. How's the market? This kind of goes back to our supply chain discussion from just a couple seconds ago. It wasn't just the contracting industry that was interrupted when it came to supply chains. I can remember driving around Western New York looking for toilet paper because we did not have an ample supply at our house when this whole thing kicked off. So thankfully, that's one supply chain that seems to have been restored. Tom Brady's been to more Super Bowls than there are active MLS and active listings in the MLS right now. I hate Tom Brady. I am not a Tom Brady fan. I never have been. Obviously, I'm a diehard Bills fan, so this image hurt me to post, but it's also kind of true, and that hurts even more, to be honest with you. So let's go ahead and jump into our questions from housing providers around the country. Long-term power outage. This is in Texas. Tenants without power, please advise. Hi all, so as everyone may be aware, Texas has cut off the power to a lot of homes across the state. My tenants have been without power for 16-ish hours and will probably be out tonight as well. I've contacted them and they seem to be fine. The gas range still works and I believe the water heater is still working as well. But my question is, what duty do I have to them if the power doesn't come back on for an extended period of time? Do I need to find them a hotel? Would that be covered in some standard insurance policy one of us might have? Any advice would be appreciated. So unfortunately, this is a reality for a lot of people in Texas right now. Not just in Texas, a lot of the states that are experiencing cold weather right now in the South that typically don't experience cold weather, at least not in the caliber that they're experiencing it currently. I mean, Texas has snow for the first time in a long time, is my understanding. Talking to another property manager down there, I think that he said it was the first time that he had seen snow in like 18 years in Texas or something along those lines. So it's definitely an unprecedented event down there. I understand that the state of Texas is not really qualified or not really set up with plows and salt and sand and everything else to deal with situations like this. And the power grids aren't either. I mean, we're in the Northeast where we get a lot of this extreme weather. As a matter of fact, we picked up about a foot of snow in the Buffalo region from Tuesday. I think it was Monday night into Tuesday. We picked up a ton of snow, and we know how to deal with it. Our roads are clear, our parking lots are clear, things are shoveled. We're pretty good at handling that. Very different situation in a place like Texas where you're not set up for it. So this is a failure of the utility, not a failure of you as a housing provider. This is not something that's within your control. You can't control the utility company any more than you can control the price of gas or anything else. So keep in mind that, you know, you're talking about a hotel. If the city that the tenants are in doesn't have power, chances are that hotel may not have power either. So that might not even be an option. This is a really unfortunate situation, but there's not really anything that you can do as a landlord here. There are a couple things you can have your tenants do. Have them turn on the water spouts to prevent the pipes from freezing if at all possible. It's a lot more difficult for moving water to freeze than it is for stagnant water, steady water. So if you can, if your pipes aren't frozen already, you might want to crack the spouts just to get a little bit of water flow to prevent the pipes from freezing. Just a trickle will do. You don't need to run it full blast or anything like that. If you have food that you're concerned with spoiling, that can be stored inside of coolers and put into a vehicle or into a garage to prevent spoiling. As long as you're below freezing, everything's just going to freeze, so it's not going to spoil. So that's something to keep in mind. Unfortunately, you're pretty limited as to what you can do for the tenants. If you wanted to sit and try to do a generator or something like that, maybe if you wanted to go that route, but good luck finding a generator in the middle of a winter storm like that. So hopefully this resolves itself pretty soon and you are able to move forward, get power restored. You don't wind up with frozen pipes and damages and things like that. Good luck to everybody down there in Texas fighting through this. Hopefully you guys are able to get some warm weather soon and thaw out a little bit. Tenant lockouts. The tenant locks themselves out. How do you handle this? Do you charge the tenant for the service call? Yes, we absolutely do. And we put it right into our lease what the amount is that we're going to charge and everything else so that the tenant is aware on the front end as to, see, I want to make sure that I loaded this up into, nope. See here. There we go. I wanted to make sure I had the right image loaded up for you. This is actually direct pull from our lease. This is our lockout policy. So we get tenants that get upset when we tell them we have to charge them for a lockout, but we're a small company. So anytime somebody calls us for a lockout, it's pulling us off of whatever it is that we're doing and taking time out of our day. And we need to be paid for that service, unfortunately. It's one of those things that, you know, if I'm in the middle of doing a bunch of accounting work and somebody calls me for a lockout, okay, it's going to cost you because I have to leave the work that I'm already doing to come and service you. We also tell tenants they have the alternative of contacting a locksmith and having a locksmith let them into the property. Definitely an option that a tenant can use. But if a tenant calls us for a lockout, this is the rates that we charge. These are the rates that we charge. $75 Monday through Friday, 9 to 5. Excluding holidays, $95 on the overnight, $95 on the weekend, and $125 on the holiday. And that might seem extreme, but I have literally been pulled out of family gatherings, you know, holiday gatherings and things like that, and had to run 2 hours to do an unlock. It was a long time ago. It was when I was a lot younger in my career. I don't think I would do that at this point. I think I would either send one of our staffers or tell the tenant to call a locksmith directly or something along those lines. But yeah, if it's a situation where you have to go and unlock the door for the tenant, it is taking time out of your day, and you should probably have some kind of a charge arranged in your lease for that. Might be a little bit different situation if you live in an owner-occupied duplex and you literally just have to walk out your front door to unlock the tenant's door for them or something. That's a little bit different scenario. But if you have to physically go from one location to another, or you have to send somebody from one location to another, there has to be a charge for that. That is a service call. Repair responsibility. This is a good one. What would you do? Our tenant's child broke the door off the vanity and it wasn't fixable, so we went ahead and charged them for a new one. Our tenant's father is a plumber, so she offered to have him do it so they could save some money. We said yes, which was a big mistake. We couldn't find the same size vanity. So the vanity we bought is not as high as the previous one. Now there is a part behind the wall that is all unfinished. He left the top off and didn't caulk any of the cracks yet because he was waiting to see what we wanted to do with the wall. Now we have to hire someone to fix the wall. Is that something that we should pay for, or is that something that the tenant should pay for? So the tenant's already paying for the vanity, which they broke, and it sounds like you've got the tenant in agreement that they're paying for that without too much difficulty. You purchased a vanity that was not the correct size, is really what it boils down to here. The new vanity ordered by you as the housing provider is smaller. In this instance, I would say that you should probably just handle the wall improvement. The tenant's already covering the cost of the vanity. I would say that the landlord should take care of the wall improvement because that's an above and beyond kind of thing. If you had purchased a vanity of the same size, or maybe a vanity that was even a touch larger, you probably wouldn't have to do those wall improvements, which basically is what puts you in the position that you're in right now. So from that perspective, I would likely say, yeah, this is something the landlord should pick up the tab on. And honestly, I don't think it's going to be that much. It doesn't sound like the wall is, all busted up and broken and needs a ton of work. It sounds like we're probably talking about some drywall fill, some drywall work, and maybe a little bit of paint or something like that. It doesn't sound like it's going to be too awful extreme. So I would go ahead and say, yeah, this one's probably on the landlord. The other thing I'll mention is do not let tenants do work for you. Do not let tenants' family members do work for you. Use insured vendors, make sure that they have proper insurance, and pay them directly. Don't let tenants do work for you. It's a great way to have work started and never ever finished, or not done to the quality that you want it done to, or whatever the case may be. Not saying that the tenant's father, who is a plumber, is, a bad vendor, but until you have used those people and, have insurance and things like that, treat them like you would any other vendor and pay them directly. That's how I would handle a situation such as that. All right, existing leases at purchase. So we're purchasing a duplex with tenants already occupying the units. Do you have them sign a new lease on day one, or how do you handle the takeover? Edit, the one side is month to month and the other side is on a 6-month lease. We've talked about this somewhat in the past, talking about getting Estoppel certificates and things of that nature. Here in the state of New York, the lease will survive the sale on a residential property. So what that means is I'm responsible for any leases that are in place on the property when I purchase it. So that 6-month lease, I still have 6 months on that lease before I can make changes to the lease terms and things of that nature. The month-to-month one is a little bit different situation. You may have some more leeway on that one. You may want to put them on a month-to-month lease. You may want to put them on a 1-year lease. You may want to just wait and see how the tenants are before you make any sort of commitments and putting people on leases or anything like that. The one thing I would recommend doing is prior to closing the transaction, have some sort of an Estoppel certificate put in place for the tenants, so that basically, we're going to show you an Estoppel certificate. Let me switch to desktop mode here. This is literally one that I pulled off the internet. Don't take this as being the best Estoppel or even an Estoppel that you should use. Contact your attorney before you start going through this process. And realistically speaking, if you're in an attorney-closed state, attorneys will probably be the ones that handle the Estoppel certificates in a situation such as this. But essentially, an Estoppel certificate is a document that is signed by the tenant indicating that they are in agreement with all the terms listed on the Estoppel certificate. It's a good way of having them verify that all of the lease terms are true and correct, and that there's nothing that's been agreed to outside of the lease, or that there aren't any addendums missing from the lease, things of that nature. We're just going to go through this briefly. I'm not going to sit and explain this whole thing in detail, but at least it gives you a feel for what an Estoppel certificate is and what it should contain. So basically, it says that the undersigned tenant is certifying as follows, talking about the lease, the date of the lease, regarding the premises, the date the lease commenced, the date the lease expires, whether or not the lease has had any amendments or modifications, any sort of renewals, assignments, and you basically are going to select yes or no there. The tenant has accepted and is now in possession of the premises, basically stating that the tenant agrees that they are in possession of the unit. The monthly base rent is whatever. The amount of the security deposit is whatever. So now you have clear record of this is the monthly rent at the time that you're purchasing. This is the security deposit at the time that you're purchasing. No other security deposits have been made except as follows. So maybe if you have some kind of a pet deposit or whatever, you would list that there. The tenant is paying the full lease rental, which has been paid in full as of the date hereof. No rent or other charges under the lease have been paid for more than 30 days in advance of its due date, except as follows. And this would be where you would list any prepaid rent. I would probably actually want this altered such that If there are tenant arrears, the tenant arrears would be listed here as well, so that you know what the tenant ledger looks like coming into your ownership. All work required to be performed by the landlord under the lease has been completed except as follows. So if the landlord has maintenance work that they promised to a tenant as part of the lease and then have not completed, that should be listed here. To the best of the tenant's knowledge, there are no defaults on the part of the landlord or the tenant under the lease except as follows. So this would be if there are ongoing issues relating to the lease, you could list those here. To the best of the tenant's knowledge, tenant has no defense as to its obligations under the lease and claims no set-off or counterclaim against any other party except as follows. This would be where the tenant would air any sort of grievances that they have against the lease, or if there's, again, an ongoing dispute about something in the lease. Tenant has no right to any concessions, rental or otherwise, or similar compensation in connection with renting the space it occupies, other than as provided in the lease, except as follows. This would be something like if there was a verbal agreement that the tenant could park an RV on the side of the house, for instance. That's probably something that's banned in the lease. If there's an agreement, you might want to have that stipulated in this estoppel. All provisions of the lease and amendments thereto, if any referred to above, are hereby ratified. The foregoing certification is made with the knowledge that a lender is about to fund a loan to a landlord or third-party purchaser, is about to purchase the premises from the landlord, and that such party shall rely upon the representations herein made by the tenant. Basically telling the tenant, hey, don't lie on this because this is what we're counting on when it comes to operating this property from the onset. So it's pretty straightforward. That's what an estoppel certificate would look like and should contain. Again, that was literally a copy and paste example from the internet. Don't use that particular document and say, oh, well, this was guaranteed. I'm not an attorney, by the way. You should certainly be contacting an attorney before you jump into doing anything with estoppel certificates or anything like that. And obviously, if you're in a position where you're closing a property, chances are you're going to have somebody looking after you from a legal standpoint. But if not, just understand what it is that you're getting into with these estoppel certificates. I think that an estoppel certificate on a multifamily purchase is, generally speaking, a very good idea for the exact reason that that document exists. It helps you to verify from the perspective of the tenant everything that's on the lease, make sure that everything is out in the open before you jump in. There are some questions on that estoppel certificate that could raise, some real concerns that maybe hadn't been discussed prior. So it's good to know that if there's anything out there that needs to be addressed, that you might be picking it up on that estoppel certificate. So keep that in mind when you are closing on a property and you do have somebody living in the property. At least here in the state of New York, that lease is going to survive the sale. So getting an estoppel certificate as well as getting a copy of the lease and any amendments thereof, super, super important, super, super critical. That pretty much wraps things up for this week's episode of the Ask a Property Manager show. Thank you all so much for watching. We love producing Ask a Property Manager, and you can definitely help us to improve by dropping a question in the comments either on Facebook or YouTube, and your question might be picked up and answered in an upcoming episode. If you enjoyed this content or if we brought some value to your day, please do us a favor and hit that thumbs up button. YouTube and Facebook both push videos based on community feedback, so every like, comment, subscribe, and share helps us to grow and reach more people. We'll be back next week on Wednesday, February 24th at 10 a.m. Eastern with a new show you won't want to miss. Thank you all so much for watching. We'll see you next week.